the transformation of your company from a private one to one that's publicly listed on the Colombo Stock Exchange could be a very smooth one if you have the right information at your fingertips. On that note, welcome to Going Public, a show which explores this very journey and makes sure that you have the right information to make the correct decision when it comes to your company. Going Public is a collaboration between the Colombo Stock Exchange, the Securities and Exchange Commission of Sri Lanka, as well as MTV Sports. Now, during the past weeks, we have explored the success stories of companies which have gone public, and we've also shared the information about different roles that stakeholders play when it comes to this big step in the future of your company. On that note, I'll hand you over to the very capable host of the program, Mr. Vasula Premavardhana. He is a capital market specialist as well as former director of the Colombo Stock Exchange. Vasula, over to you.
Thank you, Amaya. This week we have an interesting story of a family company that became a conglomerate and then had a successful public issue. And here to tell us that story, Mr. Hussein Yusuf Ali, CEO and Chairman of HEMAS, and Malinga Asikoratna, CFO and Group Director of HEMAS. Welcome to Going Public.
Thank you.
Hussein, let's start with you. Your grandfather, I think, Sheikh Hussein Ali Yusuf Ali, started this company back in 1948 as HEMAS Drugs.
HEMAS Drugs Limited, yes, that's right.
So if you just briefly tell us the history behind this company.
Yeah, so as you say, we were founded in 1948, and then, like most other entrepreneurial organizations, the company entered various fields of business. He had 4 sons, so each one of them joined the businesses, as time went on. And I can't count the number of businesses we've been in and out of. Over time, I think we settled on some areas where, obviously the company found to be its strengths. And having gone through the 70s when the closed economy stage,
right,
and then things opened up and more opportunity came. And then me and there are 4 of us in our generation in the business today, so we're the 3rd generation. And we joined the business in the late 70s, early 80s. And around early 90s, the company structured itself into a sort of a holding company and specific business enterprises. And as you know, 2003 we listed the company, and here we are today. So we get listed under the diversified as a diversified stock. Essentially, but I think to better describe what we do, on one hand we are involved in healthcare and personal care or consumer products, and on the other hand we are involved in hospitality and travel.
Leisure, yeah.
And of course we're involved also in areas like power and a few other areas which we club under a 3rd basket, as it were.
Right.
Today, revenues of what is it, 250 million?
Yes, annual revenues of around $250 million, or roughly 30 billion rupees is the group revenue.
Right. So a long way from where it started in 1948.
That's right, long way.
And, yes. So what made you all transit from this, intensely closely held group into a publicly listed company?
Yeah. So at the time, in the early 2000 or so it was, when the 2nd generation of the family was sort of passing the reins on to us, as we said, the 3rd generation. I mean, we got together and we asked ourselves, where do we want to take this company in the next 10 or 20 years? And one of the things that we said to ourselves is that we would like to stay together and not get into the trap that a lot of families get, where you sort of bifurcate in order, at some point in the family's history. So we said, yeah, we want to stay together, but obviously we want to build the pie, and also we want to have economic freedom at some point on for all of us. So that was one. The other part, of course, is we needed to raise money for our power project that we were getting into. So these were the drivers of us going public.
So did you also try to consider any other forms of capital prior to your decision to listing?
At that time, not really. I don't think the market was as sophisticated as it is now. So no, it was really the listing route.
So this is a good story, because one side, of course, you wanted to raise capital, which is mostly why most people go and list their company. But secondly, you brought in an interesting aspect where, as a family company, you believe that you may actually have better structure and a longer, a future within and holding the company, but yet not losing control of it, because losing control was not a feature that you had to worry about, because most family companies, of course, the first thing they say is, they don't want to do this because somebody will come and take over the company.
Yeah, sure.
Right. So you had no fears of such. How did you all figure out that you will overcome that challenge?
Well, I mean, first of all, it was pretty simple. At the time, we were giving out 20% of our stock. So, there was really no chance of anybody coming and taking over.
Right.
But I think the more important thing is that I think at that time and over these 10 or so years that we've been public, the family unity is a very important thing, and we have conversations going within the family which sort of says that this is something which we will nurture and pass on to future generations to come.
So this kind of allows you to also to keep the company identity. You all remain on the board, is it? And how would this transition happen?
You mean the transition
from
going forward?
Family held, yes, going forward. Family held to a family, the orientation, kind of a brand image.
Yeah, no, clearly, I mean, from the time we were listed, at the time we listed in 2003, we were, executives in the company. We were directors on the boards of the subsidiary companies and the main company as well. And also we were shareholders. And oftentimes it was the shareholder hat that you wear least often.
Right.
And most of the time you're thinking as an executive. So we said one of the things we wanted to do was over time to draw a line between management and ownership.
Right. And
separation of management and so I guess over these 10 years, and it's taken that long, so we've made some progress in that area, and we was mostly getting out of management now, and we'll be focusing on ownership. Of course, we continue to play a part in the key strategic decisions of the company, and also very much in the values and the identity of the company as it goes forward, which is very important to us and to any family company.
So initially, when you were the pre-IPO days, or maybe say 1 or 2 years before the IPO, did you start structuring the company to kind of guide you along for the post-IPO stage? Did you start hiring professionals, or start letting go, giving different kinds of structure to the company?
Yes, we did, but we were fortunate in that the type of businesses that we were in, like the FMCG business, like the healthcare business, already required you to compete with multinationals and other companies. So in terms of structuring processes and structuring systems and all that, and also getting good talent on board, we had achieved some degree of I would like to think that we were a professional company even before we went we listed. So from that point of view, and also we had a good financial governance system in place. So the transition wasn't that difficult for us. But yes, there are some things that we did have to do. We started having to get our affairs in order, and things like the board getting people on the board and other things. But by and large, it wasn't too painful a journey for us.
So you had joined by this time the pre-IPO or post-IPO?
Actually, I joined Hemas soon after Hemas went public.
Right. So you're one of the first acquisitions.
Yes. So when I got the opportunity of working at Hemas, it was probably 3 to 4 months after going public, and it was in the news. It was known as a high-profile organization. I guess because it had gone public, it was
quite a big issue, I think, the time.
Yes, it was known as a highly successful IPO. So all that was there, and it was very easy for me to get familiar with the organization.
You were an analyst at that time, or a fund manager?
I was a fund manager before joining Hemas. So apart from the fact that I liked the opportunity that was given to me at Hemas, the decision was also quite easy.
So that's very interesting. So obviously before you wore the inside hat, you actually analyzed the company as a fund manager for the IPO, should we put our money in, or so on and so forth.
Yes.
So just going back to that day, how did you perceive Hemas, if you can remember?
As an investment?
As an investment.
I think, we all at that time, at that organization, it was Eagle NDP, we all sort of subscribed to that issue. It was as a valuation, from a valuation perspective, we found it to be quite attractive, an attractive investment, and which was later proven to be true. And when it started trading, the issue price was 50 rupees. On the first day of trading, I think it went up to 100 rupees. So we were quite happy with our decision.
Right. So Hussain, pre-IPO, the process, if you are going to guide anyone else who has a family concern, where did it begin and how did it evolve?
The first thing I would like to say is, we probably left too much money on the table.
Certainly, if it went up to 100, yes.
I think the greater point there is that, when you're a family company and you're outside when you're not market savvy, as it were, oftentimes you don't realize the value of your company. And in this case, clearly, we thought we were valuing it fairly, but it turned out to be not that much the case. So
certainly a hot issue.
So a hot issue, yes. So I think your question was, how did we prepare for going for IPO? Well, first of all, I think we spoke to several people, and to get us a sense of whether this is a journey we would like to do, and I think appraised ourselves of the benefits and the challenges. Yeah.
It's time to go for a break. We'll be right back with Mr. Hussain Yusuf Ali, more on Hemas. Welcome back. Yes, Hussain, we are talking about the process leading up to the IPO day. How long was the period from the day you decided that you should list?
Yeah, I would say about a year or so would be sort of how long it took. But there was some thinking going on in the background a little bit before that. But by and large, a year of thinking, but I would say 6 months of serious preparation.
Okay. Yeah. So you obviously either went to the stock exchange, or was it the investment bankers that you worked with?
We had conversations with the stock exchange as well, but essentially we had an investment advisor, and so they helped us to take care of
the whole process of the due diligence and valuations and so on and so forth. But of course, you said that you were, from the valuation side, you left too much on the table.
Well, in retrospect, yes. But having said that, I think there's a plus and minus to it, because our issue was a small one.
Right.
So even at that time, we were not necessarily saying that we want to get the maximum possible price, because we didn't. This was our first experience, and we did want investors also to make some money on this, because what we were really trying to do is to create a foundation for the future. So
certainly, yes. In fact, coming back to that, I'm sure Malingal can add to that. At the end of the day, the valuation that takes the stock up comes back to you in the percentage you're holding. Yeah. So you're actually not losing out.
Yeah. Sure.
Because if you had 75 or 20%, 80% left, that immediately gets rated at 100 as opposed to 8.
Sure.
How about you being an analyst and a fund manager? What's your view on the valuation price?
Well, as I mentioned, it was an attractive price, so I guess that's a different way of saying perhaps you're leaving too much on the table, but I guess you've got to leave something on the table for the investor as well. It's very difficult to say what would have been the optimal price.
Right.
Given the interest at that time for the stock, there was a quick run during the first few trading days, and when you look at a longer term horizon, still we have performed as a stock. We have performed fairly well. So I think given that the percentage that was floated in the market was 20%. I wouldn't say this was a sort of a extremely underpriced issue or anything like that. I would rather look at it more positively.
Well, certainly.
Yeah.
Because I guess one of the questions that I guess everyone would be thinking is the valuation. What price should we come out of? That is the greatest $1 million question for the people who wants to list. Sometimes you're also divesting a bit of your shareholding, or sometimes it's completely IPO. So valuation question remains. So like I said, at the end of the day, if it's a family holding or you have pre-holdings, the valuation going higher is not quite relevant to the current holders, because it also, the whole sea lifts. But on IPO, of course, the company is trying to raise capital for funding purposes, so you want to maximize.
And if I may, I think in addition to the price, I think one of the attractions in the stock was how we tried to position it, because and I still remember we had along with our investment advisors, we came out with a sort of a positioning which said about a hidden gem. Because at the time we were one of the few real consumer companies at the time which had our own brands.
That's right.
And I think that was picked up by the market, and Malinga will probably add more to that. And saying that here's a chance to really invest in a sort of a consumer play.
Right.
So, but yeah, so my point was it's really important, I think, when you're coming out to try to get across the uniqueness in your story. And so this was our unique story. And
so you did road shows in Sri Lanka as well as abroad?
No, we didn't go abroad. It was too small, the valuation. We went and met a few people. I would road shows, or we just met a few people in institutions in Sri Lanka. But
so the institutional holding at, I'm sure you might not even remember it at this point. How was the institutional holding to the retailer holding at the IPO stage?
I can't remember. You can.
At current, how is it?
Currently, there's a fair bit. Say, if you look at the public float of 28%, there's a fair bit of local institutional holdings, and perhaps under 5% foreign institutional holdings. And sometimes, that reduces the retail activity.
Right. Because the large chunks are held by the institutions.
But at the time there was a lot of interest by foreign institutions as well. It's just that when we did the allocation, we were keen to make it as broad-based as possible. So I think people just couldn't get their hands on what they wanted.
Right. And did you subsequently come back at another point for secondary offerings and raise capital again?
Yeah, we came back once into the market, 2005 or 2006 it was.
2 years after.
Was it 2 years or 3 years?
2005, that was not a capital raising by the company. That was
that's right. It was not a capital raising. It was earlier we had given 20% out. So either 2005, 2006, some period around that, we gave a further 7.5 or 8% out.
Right.
Because so we felt it was.
So that was a little bit more.
Yeah, and that exercise was really driven at bringing foreign institutions into the organization.
Okay. Right, so that you actually had the opportunity you didn't give them the first time around, you kind of...
That's right. We had a strategic purpose behind that because...
Okay. The cultural transition, was there again from a family-held company and now it's public, you are more transparent, you have to answer to the public, you have investor relations person perhaps. How was the cultural change? How did it affect you all? The family members?
Well, I think the biggest cultural change is the fact that, when you're a family business, you're sort of flying under the radar. Nobody knows you, you're not reported in the financial press or whatever, and you don't have to get out there and shout your story. I think that was the biggest, shall I say, for us at least, a sort of a challenge to deal with, because we were fairly low key and we're used to being like that. So yeah, I mean, just like we're on this media show today, right. Wouldn't have done that if we were private. So that, I think, is a sort of a lesson, and it holds lots of opportunities, because you don't realize that by people hearing about your story and hearing about your company.
Certainly. That's basically what I was going to come to. After all, at the end of the day, what did you get? What did you get out of going public and going through this transition?
I would say, if you ask me in answer to that question, I would say I would answer that question in two ways. Firstly, I would say I think we were trying to avoid the pitfalls of a family organization not going into the third or fourth generation. And what we were trying to do was to create a framework where the family members could still continue to own the company, but that the company could continue to thrive beyond them being executives in the company. So from that point of view, I think that was, I would say, something big that we were looking for, and I think that has held out.
Right.
We think we have created a platform that is good for the company, a foundation that will serve the company well, not just in the year or two after going public, but for the next 10 or even 50 years. So that was, at a much longer term horizon. From what did we get? What did we get by going public? I mean, at a basic level, of course, we got capital to fund this venture that we were telling you about. I think we got recognition,
global as well as local.
Yeah. Through the coverage and all that. Certainly, we became more interesting for top talent who are out there, who suddenly saw us. I mean, like Malinga himself said. And took notice about what we do, and thought that this is a company we'd like to work for.
And of course the valuation of the company, which
the valuation of the company, which was a discovery, and also I would say by interacting with various fund managers and we were more exposed to the world at large, and and sort of opened our minds as to best practices and
just to add to that, I think we learn from the capital market as well, and we continue to do so by interacting with fund managers and investors. One thing, you asked the question about culture, whether there was a change. From what I understand from the stories I've heard, Hema's used to be a highly performance-oriented culture anyway, even before going public. Afterwards, there was a not just profit or cash focus. We knew we are making so much of profits and cash, but there's a focus on looking at what the valuations are. How do you build value on this business? So that orientation was also built as a
time for another break. We'll be back on Going Public shortly. Welcome back to Going Public. Smiling, we're talking about valuations and the culture post IPO culture.
Yes, I was going to say that pre-IPO, Hema's was anyway a highly performance-oriented company. So that did not change post IPO. But what did change was, we did not stop at just looking at the profits, looking what our cash was. As a cultural change, within the organization, we started looking at building value or managing for value. And now everyone is talking about how can we build value in businesses. So that was, I would say, one outcome of going public as a result of interactions and learnings with the fund managers and investors. And of course, at board level, we have had good inputs towards managing for value.
Right. So how do you align, say, talking of value, the management who comes from a culture of family owned, the employee interest, plus now you have the new aspect of public interest in your action. So how do you manage that? I mean, how does that happen within HEMAS?
So the question was, there's
the management of the aspects of, say, from the public interest in your company,
yes,
the employees, plus the family holding, and how do you kind of transact this whole thing into a value orientation? Right. Yes.
I think it has been a journey of learning, and when you look at how we've come to, if I may call it value orientation, we've come to realize this is aligning everybody's interests, not just the interests of the public investors. It is in the interest of all stakeholders to make sure that we need to build value within the business.
So is it a human resource objective? Example I'm saying is, when you're a family oriented company, Hussein can answer that, of course is your interest. Now of course you drive your people within the company who are not shareholders, but now you have aspect of public interest for shareholders. So you have to also involve the workforce, you have to involve the managers, the management, to align yourself with this valuation story, because now everyone's eyes are on you.
Yes.
So how did that process, how do you go about doing that? Is it explicit? Do you have training given, or do you all have some process that trains your employees as to this is the guideline, or is it strategic in how you decide on what you take on in your business?
Right. You want to go at it first? I can add from the
yeah, I mean, I'll try to first of all, at the time we listed the company, we actually we had kept a certain amount of stock that we gave,
like employee stock,
to all our employees. So it sort of increased the appreciation of value and stock price and stuff like that.
Yes, because they are part owners now.
That was an important thing. And then over a period of years, we have had, I think 3 tranches now of stock options. So, I mean, what that's obviously trying to do is to align the interests of the owners and the managers. And those have been done.
Brilliant. So you have a ESOP that's continuously. So this was not something that you did obviously prior to your IPO stage?
No, obviously not, because it makes no sense when you don't have a listed price.
So the valuation comes in and they have some reason to stay behind perhaps and increase value, and when they leave they have something that they can take,
I mean,
which is fantastic. That's what I was trying to find out, how you manage that, because the ESOP scheme is an interesting one. So what kind of percentage do you talk about when you say employees stake?
I think we have given 3 tranches, or we offered
more than that. I mean, each year roughly we give out 1%.
Right.
But we've done probably 4 to 5 tranches, which is 4 to 5%.
Right. So can you explain your ESOP for people who may not have heard of it? How does your employee stock options
So the stock option plan is a 3-year plan, where the employee has to, once you're granted the ESOPs, you have to retain within the company for that period before you can benefit from that.
Which is what, 1 year, 3 years?
3 years. It's a 3-year retention period. So afterwards, you have the option to sell it at any point in time. And it really depends on the exercise price
Right.
of the option
Right.
and the market price. So there have been some ESOP tranches which were highly successful and some which are not so successful. Depends on the market
Right.
conditions as well.
And you find this as an effective way to align employee interest with the company's own, certainly.
I would say as a general comment, the ideal conditions would be if the stock is highly active in the secondary market. This would be highly effective.
Right. So provided there's liquidity for them
Yes.
to exit.
Yes.
But of course you do have, somebody can get out with 500,000 shares without having an impact. 500 to 1,000. That's what I mean.
Well,
Yeah.
depends on
Because
the
any
I
company
guess-
that has an IPO does so with I think at some point it was 15% of your company's free float had to be there. Now it's 25%.
Yes.
So the institutions might be holding 85% of that perhaps. And then you have that,
Yes.
25% out there in the market. So you can still exit in small chunks,
Small chunks, correct.
which most employees would probably be
Yeah.
holding. Excellent. We talked about investor relations.
Yeah.
How does HEMAS react with the public? How does this exchange of information happen?
Well, at a philosophical level, again, we try to be very transparent. We're not trying to sell them a story, and we try to explain to them as best as possible how the company is doing, what are, obviously there are certain information you can tell, certain things you can't. And as I was mentioning to you, Vaslu, a while back, we also try to obtain from investors, especially our foreign investors,
Right.
some perspectives that they may have by comparing, say, our FMCG business against a business in, India or Thailand or whatever.
So you actually find that you get a input back from them, I suppose.
It works both ways.
Right.
But on the on the more detailed aspects of it,
I think they give good input to us on the business portfolio and how we should manage it, and also their input about the valuations and what things we should do to make sure the price reflect those values. To that extent, it's important that we are in a position to engage with
So
them
at
at that
what
level.
stage you said the first, of course, when you did the IPO, you didn't allocate that much to the foreign institutions. Then as a secondary offer you did. Just out of curiosity, as Sri Lankan capital market is concerned, how much interest do you see where foreign investors have in companies such as yours that is listed in a local market?
Oh, no, I think there's significant interest. We recently participated in the CSC forum in Singapore, and there's lots of interest, but we don't have that many shares.
The liquidity,
the liquidity is
factor
limited.
is
So that is a
keeping them
challenge
out.
that that we have, and we are hoping that as in time, as we grow, as the company expands, that will become more attractive to.
Right. So in your view, what would this most attractive feature for a company to attract foreign institutional investors? What are the features that they are looking for?
I would say there's, you can't paint them with the same brush. There are so many different types of institutional investors. Each one has their own angle.
Good
Some are
governance
very interested in our consumer brands part of it, and the fact that we are positioned well in the Sri Lankan market. So that's certainly an interest. Some have been positioned, at least in the earlier days when we were not investing so much, with our high return on equity. Some are attracted by the fact that we have a high level of governance in the company.
Right. And the transparency.
Yeah. So.
I guess governance definitely. We've seen in many foreign investors as one of the key requirements, and management capability, some investors, when they interact with us, they really ask some tough questions to understand how we look at the business, whether we really understand the business model, how we look at industry outlook, economic outlook. So they try to gauge management capability as well. And also I believe in our case, we've been quite frank with the investors, and that builds a certain degree of credibility which is important for them.
Right. Okay, Maring, it's time for another break. We'll be back shortly with Hema's Going Public. Welcome back to Going Public. Yes, I was wondering, now we covered the pre and we covered the post Going Public. What are your current and future plans as far as Hemas is concerned?
Well, I think the way we are looking at it now is, as I said before, I think over since going public to now, we consider it as a period of laying the correct foundation, and of course business growth as well. But as we discussed earlier, our market cap has gone up by roughly 5 times over a 10-year period, so that's decent returns. And but we're really looking forward at the next decade, as it were, as a period of accelerated growth, a period of inorganic growth, a period of expanding outside the geography of Sri Lanka, and just stepping up the pace now since we have a good foundation in place.
Certainly, because now you've been in the market for long enough.
Yeah,
the public knows you, the local institutions knows you, the foreign institutions knows you. You have got your act together as far as you're concerned as to how you translate this relationship between all these people. So you're at a perfect juncture, I think, to reap the benefits of taking your company from a family concern to a publicly listed, transparent, well-run professional company. So talking of your diversified holding company, do you intend to go back to the public on various, now that you have a capacity to raise money at any point, you have a good record, how do you intend to do this? Do you have any plans on the future to come to the market again, or develop another angle, like you said, inorganic growth, perhaps something that we haven't seen Hemas do? Anything that you want to let everyone know about or talk about?
Just a small point of the inorganic growth. We just made an acquisition last year of 2 billion rupees. We bought JL Morrison, so we made the start.
So we will see something of coming from that, is it?
Well, potentially that would be one route. In particular, healthcare and personal care sectors.
Because you brought it up.
Yeah.
The funding for the purchase of JL Morrison's, was it internally raised, or did you go to the public in any manner to raise some
we
of the
did
funds?
not go to the public. Partly it was internal cash, about 60% of the acquisition, and the balance was bank
you
loans.
had cash, you already had no requirement to go to the public.
That's
Is that
That's right.
one of the reasons?
Yes.
And debt capital?
Well, this time we went to the banks. We went for bank loans.
Right.
Yes.
So how do you see, as a corporate or a CFO even, listing debt, bonds?
So in general, I would say going for listed bonds is a good idea, because you're tapping into a much wider fixed income investor base, rather than just limiting yourselves into bank loans as a general comment, and that will help you to actually reduce your cost of funding. That is one, and of course you can offer to the investors some desirable investment opportunities in terms of what kind of term you're offering. Is it a 5-year bond or a 7-year bond? Depending on that, you have different types of investors. It can be.
So do you think the market is ready for it? For example, now you yourself, you said a couple of, a short while ago,
Yes.
you went to the banks for,
That's right. Yeah.
as opposed to going to the market.
Yes.
Because you can come up with convertible issues, you can have bonds.
Yeah.
You probably might even get a rate that is lower than what you may get
Yes.
from a bank.
So yes, whenever we look at this option, whenever there's a requirement for debt, we look at this option and then look at the pros and cons and make a call. And from time to time we consider the option of listed debt. Yes, I would say there's a strong case for lowering cost of funding.
Right.
But typically, to my understanding, it would be largely institutional investors who will be attracted.
Certainly.
And I think particularly these days there are tax incentives
Precisely.
for listed debt investors. So I think it's certainly an attractive proposition.
I think that was done to encourage more companies going to the public to raise, their capital. Any other concern that you may want to talk about, for example, as the future is concerned, say, any other mergers and acquisitions?
No, I mean, on a general note, as I said, we are, certainly looking at accelerated growth, and we're going through right now, a change in the leadership that I mentioned, as both in terms of securing the succession challenge that I mentioned before, that most organizations have difficulty with.
Coming from family ownership to going into the public.
That and also just normal organizations find at any level succession a difficult challenge. So we're going to have a new CEO come in. Well, not a new CEO. He's been with us already for the last year or so.
Right.
Well, coming up to a year. Stephen Enderby, he is a gentleman who has operated largely in the private equity space. He's worked in Sri Lanka for 5 years. He's been in India for 9 years, and that's a very fast-paced, very aggressive business environment. So looking to bring a more of an international dimension, and I'm sure injecting a new period of growth for Hemas, bringing some change in the way things were done before, and also from the governance side, going further down the route of separating ownership and management. So now we will have a CEO who is not
also not
family.
Certainly, because this is probably the final metamorphism into what Hemas is going to be. Because you came from humble beginnings of your grandfather starting a company to 3 generations now. If somebody of the family was at the helm, you go public and you divest some shares to outsiders, and now finally you're handing the reins. Yes, so that's a pretty huge distance that you have covered. So that's a good. So what would you suggest to any other such family-owned, intensely closely held companies, that this route is a good one?
Oh, certainly. I think that, as I said before, by listing your company, it forces you to adopt certain governance, a certain transparency. It forces you to have independent directors, and these, I think, are good things.
It forces you to do good things.
It forces you to do good things. So I think these are good at any level for an organization, and I think we've been fortunate enough to have really high quality board members who have departed tremendous wisdom to the organization, and I would really say that that has been also a key ingredient in our success. So it's been a privilege to have them on board, and I think we've benefited from all these things that we've seen in the listed environment. We spoke earlier about the fact that we are now better known, our brand is better known, we've been able to attract more people have been interested in our organization. We've had business partners who have come in and wanted to work with us because they are more comfortable working with a company that is listed. In today's environment, we've been able to adopt a code of governance and a code of ethics that I think is comfortable to so many of these partners.
Right.
And so we feel, yeah, 10 years hence we're pretty much in a much better place than we were
That's
10 years ago, and we've, from the family side, we've had a chance to enjoy some of the benefits of this, and I think that's also an important thing.
Another element of getting out for the family and letting the public shareholders come in, and also now you're talking about having non-family members also actually having very senior, in fact the helm of the company.
Yeah.
Which frees you up, as I said some time ago, sit in a yacht somewhere else and enjoy it.
That's right.
Malang, any final words?
Well, yeah, I would say, as Hussain also mentioned, this the next step is actually getting into the next league in terms of governance, in terms of building value, in terms of becoming even more professional, and I think it's a case study for the Sri Lankan capital market.
All right. Thank you, Zain. Thank you, Malinga.
Thank you, Vasudha.
And we'll be back next week with another interesting company featured in Going Public.
What an insightful show, Vasula. I'm sure you at home also learned a lot from the success story that is Hema's PLC. With that, we wrap up this week's edition of Going Public, but we'll see you next week as well with another great success story of a company which has gone public. So until we see you next week, take care and have a good day.